Well, good evening, all. Ira Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening of Thursday, and we're at the 29th of August, 2024. Now, tomorrow's going to be an interesting day because we're going to get the PCE numbers. But before I get too far with that, and I will get to all those numbers for you, I want to show you something that we're going to be doing. If you stay around for the end of this, we're having a Labor Day sale on my research, a 3-month special, something we've never done. I'll go through the prices and explain it all right after this. But let's get, if we could, for the moment here, if I can get you over into the numbers. We're going to get the personal income spending and PCE index at the Fed. It's one of their favorite indicators, and that comes out at 7:30. They're forecasting the income up 0.2 on a month-to-month, while the spending is seen up 0.5 month over month. The Chicago PMI index will come out at 845. It's expected at 45.6, about 0.3 better than it was before then. And the University of Michigan's final, and the word is final, August consumer sentiment numbers come out. So the last time we saw them on the prelim was 67.8. They're looking for a 68. Now, the event today, and there was a special event, and I'll come back to this right after all that. The event today that we got was NVIDIA sort of broke away from the market. NVIDIA over the past 2 days lost about 10%, but you saw a rally in the stock market. It gave everything up, by the way, in big ways in the last hour of trading, and the market sank back, giving up dramatic gains. I'll show those to you in a minute. Remember, you've got the Labor Day mentality going. So the gold was up sharply. You're losing back a chunk of that tonight. The silver as well. The dollar was up 28 points. And I have recently said I thought it could get back to the 101.50 zone. Today it hit 101.51. And that put down a number of the currencies along the way. In energy, be certain you swing over to the Novembers now. The October goes off the board tomorrow. And in Bitcoin, you no longer want to be looking at August. Make sure you get over to the September contract. You're flat on the bonds and the notes right now. So let's get to the market. In the gold, any way you want to cut it, going into tomorrow, you're at an all-time high, if it were right here, closing price. This is a weekly chart of only closes. The market has been over here. I've said to you that I think it could be going to 26,000 this year. 2,600. I wish it were 26,000. 2,600 this year, and I think that's still doable. But you're in a consolidation here. You're whipping back and forth between these highs, just back and forth. Now, there's an interesting pattern that has happened. You had an outside day down. Do you see that 2 days ago? Today you had an inside day. If this high of Wednesday is taken out, because this is already Friday action, this little line there. If that high is taken out, where might we go becomes the question to me. All right, why don't we put on the swing line to get a feel for the market? With this outside day down, you came like that. Now you have an inside day. If you take out 25.64.30, well, where's the moving averages? They're all under the market, so they're support numbers. Where's the Bollinger Band? Because that could be the number that becomes the next resistance. Lo and behold, it's at 25.93. Remember, we were talking 2,600. So that could be where the market goes. If the market does anything here and breaks, then I look for support in the area of 25.20. But the important thing is the futures are void of a trend temporarily. However, there's something else at work. And what's at work is that you have the embedded reading. And when you have the embedded reading, this takes over everything from here. Until the red line closes under 79, in my opinion, traders are looking to buy the breaks, trying to pump out against the resistance all the way up here. There could be a window envelope number. Subscribers see that in my morning subscriber video, and I update those numbers another time during the day. And that would probably be in front of that as a resistance point just before that Bollinger Band. That's what I would expect that you would have. But I am in the bull camp, even though you don't have a trend per se, you have upside bias until the red line closes under 79. In the gold-silver ratio, as I said before, gold could climb a bit against silver here. If it does, I would look for the 86.38 level, the 18-day average, to be the resistance point. In the silver market, you can see the chart doesn't look anywhere near as strong as the gold. Also, momentum is pointing down. The difference here is you have an uptrend in the sense of higher lows, higher highs. But should the market take out this low right here, which is 29.50 and a half, that would pose a problem and probably cause the market to drift back to the 18-day average. The battleground is the 100-day for support with resistance at the upper Bollinger Band. In the copper market, the pattern got overbought, hit the upper Bollinger Band. When you hit it the first time and you're not embedded, as I teach it in my courses, that's where I think the pros are coming out. And they most certainly did. Now the question is, will the support at the 200-day average hold the market? Regardless, I see an overbought market, void of a trend. I'd rather somebody else own it. It's the same pattern in the platinum. You have a higher high and a lower low, and you can see the momentum slipping there. And in the dollar, I have been looking for a short covering rally because you've had an unabated break in the market, if you think about it. So getting back to the 18-day average would make a lot of sense to me. I'd love to see it. And then the market to tell us what the new trade pattern is going to be from there. Be a heck of a way to kick off September. And with that in mind, let me explain what we're doing with our 3-month special. Number one, if you take my full research, that is my twice daily written updates, Monday through Thursday, a Sunday update, a Friday morning update, and my special reports, $99 for 3 months. It includes the morning subscriber video. If you want to just get the morning subscriber videos for the ETFs and the futures market together, instead of $84, $49. And this one, by the way, was $180 down to $99. If you take just the futures markets and you want for 3 months that, $45, nope, $29. And in this, for the Spider ETF, instead of $46, $32. It's the way to get it. You go to iraepstein.com. You look on the top left. You're going to see what? You're going to see the words up there, 3-month sale. So take a look. You'll see it in green and white. It's very easy. There'll be an icon up here for you to take a look at as well. If you're on my mailing list, I'll send out a mailer to everybody. This is going to end September 8th. I've never done this. I don't know that I'll bring it back or not. So this is a great way to get something for what I think are pretty darn reasonable prices, and you lock it in. I'm Ira Epstein. You have yourself a great evening. I'll talk to you all tomorrow.